Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Well, let's take a look at some stocks on the move today in Europe. I'm Stephen Carroll and I'm joined by Bloomberg's breaking news editor, Louise Moon. Louise, good morning. Let's start in the UK then with Rightmove, the property website, reporting earnings and shares certainly not making the right move this morning.
Indeed, absolutely plunging this morning. They were the biggest faller on the FTSE 100. It's a dramatic look at their share price move. They've been on an absolute tear for years. They've gained huge market share. And then if you look today, it kind of falls off a cliff. They're back to levels last seen in about August last year. So this is partly there's some uncertainty around the budget. They flagged that. But also, as you say, they're warning on revenue growth likely to be flat in 2026. They're saying growth of about 9% this year and much the same in 2026, so it's about 8% to 10%. They've also delayed their goals for sales growth from 2028 to 2030, so they've pushed that back as well. And this is all coming as they also unveiled plans to boost AI investment. So a lot more investment into AI potentially could impact their revenue. And analysts are saying, this could be 2 steps back for 3 steps forward kind of thing. And there's a lot of pressure to explain why now is the time to do that, considering they've been doing so well. So there's a really interesting note from Bloomberg Intelligence, and they're saying that they think that this shows that management think that this kind of historic solid top line trend is becoming tougher to sustain, and they need to spend more and invest more to keep that going in the long run, even if this is going to hamper or potentially hamper revenue growth in the short term.
Yeah, really interesting to see how that company is reacting to those broader headwinds. Looking at ITV, shares moving in very much the opposite direction after announcing that it's in talks with the owner of Sky, Comcast, about the sale of its media and entertainment arm.
Indeed, shares soaring on the back of this. They jumped about 20% this morning, so leading the mid-caps, the FTSE 250. As you say, so Sky is in talks to buy ITV's media and entertainment arms. They're saying that would be for about £1.6 billion. So this is the arm that is behind their free-to-air TV channel and also their streaming platform. So if this deal went through, it would leave ITV with their studios unit. So that's the unit that produces a lot of their entertainment shows. So Britain's Got Talent, Love Island, all those guilty pleasures. But as you say, ultimately Comcast, the US giant, would be the owner because they own Sky. So it would be, if it goes through, it'd be a real shake-up in the broadcasting space. It would create a broadcasting giant, and it follows years of ITV being tipped as a potential takeover target. Their shares have really struggled. They're about 70% off a 2015 peak. And this was kind of those shares, they plunged even more last month. Their largest shareholder, Liberty Global, cut their stake in half. They had previously been touted as a buyer. So ITV has been struggling for a long time as the media industry kind of shifts away from traditional broadcasting. So analysts are saying that this is a positive surprise, and if the deal goes through, it would be at quite a healthy multiple. So as I say, shares reacting positively on the back of that.
And lastly, to Monte Paschi di Siena, the Italian lender, posting better than expected profits in the third quarter.
Indeed, third quarter results, net income better than expected. They increased their guidance for full year profit, and shares reacting positively on the news. They were the best performer on the Stock 600 bank index this morning. They're saying that this reflects their recent takeover of Mediobanca, their rival Italian lender. So that completed in September, and it created Italy's third largest lender by assets. So yes, doing well, strong third quarter results, and lesser noting those strong revenues, better cost controls, and all that positive news. And so the next thing now to be looking for will be in their first quarter next year, they're going to present a new strategy, so how they're going to move forward post that large takeover.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.